Hello, I'm Lilda Smits for the Finance News Network, and joining me from the Antares Dividend Builder Fund is Portfolio Manager Glenn Hart. Glenn, welcome back to FNN.
Thank you.
The fund looks for stable revenue streams in your stock selection. What factors must a company exhibit before you enter the position?
We look at stocks very holistically, but they must have a high yield to pass our initial screen. From there, they need to have stable cash flows, very strong balance sheet, ability to grow their dividends. So there are a range of factors that they must pass before they get included in the portfolio.
And what are the biggest mistakes that you see investors make when on the hunt for yield?
Well, that is just looking at yield only and not looking at the sustainability of yield. So you have to look at the cash flows, the balance sheet, whether the yield is juiced up for artificial factors and whether it can grow in the future.
So what risk mitigation does the fund have in place to avoid getting into a yield trap?
Well, pretty much by systematically following all the factors that I mentioned in the first point. So if you make sure that there's a bit of growth, if you make sure the cash flow is good and the balance sheet's strong, you make sure the company has a big market share, it's solid, that there's good people running it, that is pretty much your risk mitigation.
Now, the fund's benchmark is the S&P ASX 200 Industrials Accumulation Index. How have you performed over the September quarter and over the past year?
Dividend investing has been very fruitful. Over the past 3 years, the fund has grossed 21.7% per annum. So we would just say that we've really harvested an exceptional period in history for dividend investing. And going forward, we think returns will be good, but they won't be as good as they have been in the past 3 years.
Finally, Glenn, the fund strategy is to deliver an attractive long-term yield. Which sectors do you believe are best positioned to deliver consistent long-term earnings growth?
We tend to find that we invest in sectors with low volatility, and that kind of helps the compounding effect for earnings. So we find REITs, utilities, infrastructure make up a core part of the portfolio. Financials, although their earnings are obviously way more volatile, and other sectors like consumer staples are good if we can find suitable stocks. So it's set from there very much stock specific. After that kind of, the core of the portfolio you get from the very low volatility yield type, traditional yield type sectors.
Glenn Hart, thank you for the update from Antares Dividend Builder Fund.
Thank you.